Hope you guys had a good trading day today. Let's jump into where the markets could be heading tomorrow. There's a big event tomorrow. There's a CPI inflation data, so probably markets could give a one-sided move. So let's plan it ahead of time and let's have a trade plan for tomorrow. As always, we'll begin with US futures. While analyzing the markets, I found something interesting in the markets. The recent fall that you see from the 1st of May until the 4th of May, it was quite a dreadful fall. Markets fell almost 1,500 points. So if you notice, right, this is how beautifully technical analysis works. After the entire fall, the 0.618 levels were 33,750. And despite this huge candle that you see, a 550 point candle, the markets failed to close above the 0.618 levels and struggled further. And now we are seeing a downfall from the same exact point. So in any trend, right, whether it's bullish or bearish, if you were to plot a fib retracement and the 0.618 levels are taken out, that defines the trend, that gives you conviction to hold trades. So until we see a close above 33,750 in US futures, I don't see a lot of movement in our markets. Our markets could underperform because we also are looking for a stimulus to go bullish or bearish at the moment. I think that stimulus will be provided on the expiry when we get the CPI inflation numbers tomorrow. So I would suggest trade in small quantities tomorrow, and even tomorrow night I wouldn't recommend holding an oversized position because markets could give a one-sided gap up or a gap down. But anyway, we'll discuss the levels on our markets. But as far as 33,750 is not taken out in US futures, I'm not expecting a bullish rally in our markets. And looking at dollar, dollar has been trading in this parallel channel since the 21st of March. If you can see what I am seeing right now, if you see this, the market has really not moved a lot. It has just been trading within this channel. There was a fake out and we did tend to fall after that, but looking at today's price action, it does look promising. It looks like dollar could break out, but the real worry will start when dollar starts closing above 101.9, say 102 for a conservative trader. If dollar starts trading above 102, then I think we could see some pain in our markets and we could see a bearish trend. But that we'll see when those levels are hit anyway. So to begin with today's analysis, let's look at Banknifty and just how we plotted the fib retracement in US futures. This is exactly how we are going to plot it in Banknifty from the 4th of May, this bullish candle we saw on the expiry. If you plot the point until we fell, that was around 42,600 levels. If you notice now, despite the big candle that we saw on Monday, that was yesterday, the markets failed to close above the 0.618 levels, and even though we opened gap up, the price was not sustained and we have come down below the 0.618 levels. So there is no sign of bullish activity until the price starts trading above 43,300. And for a safer side, for a conservative trader to hold any kind of option buying overnight positions, we need a closing above 43,550, 43,600 levels to have conviction to hold our longs. Until then, I will try to play out the bearish play in intraday, but I'm not entirely bearish even now. Broadly, I am bullish, but let's not lose an opportunity. If there is a bearish trend in intraday, we will definitely try to see what we could do with that. So on a smaller time frame, right, if you look at 1 hour, I found something interesting in this pattern, right? Considering this on a 1 hour, the fall that we saw on Friday, considering this was a bear trap, Bank Nifty is forming a head and shoulder kind of a pattern, right? If you see this could be the left shoulder, this could be the head, and this could be the right shoulder, with the neckline being around 43,000 odd levels. So any hourly closing below 43,000 could lead to a strong move, and the move could be around 600 points. That's how you technically analyze the breakdown of head and shoulder, the entire height of the head until the neckline. So let's see, let's wait for an hourly closing, or you never know, right? The markets could definitely bounce back right exactly from here. So on let's squeeze it down to a smaller time frame now. Intraday, let's look at 15 minutes what has been happening in the markets. On a 15-minute time frame, we had discussed in the previous analysis that markets are trading between this parallel channel, right? I hope you could see it on your charts right now, and I hope you plot the same because this channel is of great significance. It has been respected for quite a lot of days. So right now, the trade plan for tomorrow is, as always we discussed, we are gonna be having 3 scenarios: flat, gap up, or gap down. If we open flat anywhere between 43,120 and 43, okay, I'll just mark it. Anywhere between 43,120 and 43,320. This 200 point range, this is no option buying zone, calls, puts, whatever. We are not going to be trading, because look at the kind of price action here, right? You see rejection wicks on either side. This could just get you stopped out. So as far as we are between 43,120 and 43,320, there are no option buying trades for tomorrow. But before that, there's one more thing you got to notice, that from Monday, right, this zone that has been marked, the 43,200 to 43,220 zone, this was a strong support zone, because every time markets came here, you see strong rejection wicks from the bottom, which shows a lot of buying interest. But today, towards the end of market, the market did finally manage to close below the zone, and the only support we saw is the 200 EMA, which is very important. So always keep your 200 EMA plotted, especially on intraday time frames. So now, if at all we open gap down or we open flat and we have a negative bias, and the market either opens below 43,120 or opens flat and goes below 43,120, we are going to initiate a quick morning scalp, a short scalp. The first target being the psychological level of 43,000, below which the lower end of the channel. And if at all it's going to be a trending day, right? Now this is how it could play out. If at all it's going to be a trending day, and this channel is supposed to be taken out tomorrow, so whenever this channel is being taken out, I wouldn't recommend you to entirely go short with all your allotted capital. You could probably pyramid it out at 15-20% of your position right here. Wait until 42,800 gives a bounce back until this 43,000 level, and when this neckline is broken, right, when around this 42,800 is broken and you see it clearly being taken out on your 15-minute time frame, that is when you could short the market heavily, and even I will be aggressively short them. And for long trades right now, I'm not very interested because the market is noisy. But if at all you are interested in scalping or playing out a small long in intraday, there is no long until we are above 43,320, and our first target could be 43,500, followed by the gap that's pending 43,630. But in any case, we happen to close above 43,500 tomorrow, then we are definitely going to be expecting a bullish strong rally, at least until the upper end of the channel, and I think that, yeah, that gives us 44,000 levels. So mark these levels and wait for the system to come out to you. Do not jump into taking a trade just because you're sitting in front of the charts. Don't lose money that way. Be very conservative with your position sizing. Wait for the market to give a trend, and as we discussed, it's going to be coming after the CPI data. And you could also plot this trend line that you could see me plotting right now. So double confirmation will be above 43,320 for a long, for 43,500 and 630 levels, and below 43,120 we are going to see 43,000, lower end of the channel, and if it breaks out, we are going to play the breakdown. So that's Bank Nifty. Now let's discuss Nifty. On a daily time frame, there's not much to discuss. It's formed a doji, and the way a doji could be played out in daily is either the higher end or the lower end. The higher end being 18,350 and the lower end being 18,230, right? Either side, there's a daily closing. We are going to take a trade that way. Now, if at all, considering the bearish bias right now, if the market does give a daily closing below 18,230 on a daily, this is we are discussing, our first target is going to be 18,050, 18,060 levels, below which we could also see 17,850 levels. And if we have a daily closing above today's high, that's 18,350, we are going to see 18,430 followed by 18,600. But that's on a daily. How do you break this down into a smaller time frame? I would recommend you to plot this parallel channel that you see on an hourly. Since the 2nd of May, this market has been trading between this channel. Exactly this way. This was a small fake out because the market did close there and directly opened back into the channel, so that could be a bear trap. And now we have taken rejection from the upper end of the channel, so I would want you to plot this on your hourly time frame, if at all you're an hourly time frame trader. Even if you're not, you could definitely look it up for reference. And in any case, on an hourly time frame, if you see an hourly closing below 18,185, 18,180 tomorrow, our first target is going to be 18,049, followed by this trend line that, okay, let me just zoom out so you can plot it on yours too. This trend line was initiated on the 31st of March, and we found the first support zones around the 21st of April. So in any case, 18,050 on an hourly is taken out, then we are probably going to see 17,890, 17,900 levels, which also would align with the 200 EMA on an hourly. So that would be of great importance. And if you are not comfortable trading hourly, I personally myself do trade 15 minutes, so I would rather explain this on a 15-minute time frame. How we discussed a potential head and shoulder in Bank Nifty. In that context, Nifty has rather given a clearer, more defined head and shoulder. From if you notice it this way, we saw rejection, we took support at the neckline. Further we went up, but we were sold into, and exactly from the same heights of the left shoulder, we are now again consolidating here. So on a smaller time frame, on a 15-minute time frame, the three scenarios in case we open flat. In any case, we are opening flat between 18,250 to 18,280. There's absolutely no trades, very noisy zone, no option buying at all. If you open flat with a negative bias or slightly gap down directly below 18,250, then our first small scalp could be 18,220. I wouldn't recommend, because it's a very horrible risk reward. For a 30-point reward, taking a risk of 20 to 30 points is not favorable at all. So if you're a conservative trader and you can wait patiently for your setup to walk up to you, wait for a 15-minute closing below 18,220, and you're gonna get a clean, smooth trend after that. We are gonna book our target 100 points away. That's a lot in Nifty. 18,120 aligns with the 200 EMA and also the opening of Monday. So below 18,220, we are gonna short and play out 18,120. This could be coming out soon. This could play out like a quick option buying trade, because there's not a lot of support in these zones. And for any kind of longs, even though I'm a bit biased towards the bearish move right now, but if at all you are intraday scalping, your long could only be initiated if you open flat or gap up directly above 18,280. Our first trade is going to be 18,320, the first target, and the second target is going to be 18,330, above which we could always refer to the daily levels. Also, yeah, you could also mark this trend line here. Something like this. So it would be perfect, right? Because above 18,320 we will also be breaking this trend line, so we will have a double confirmation, and above 18,320 we could also potentially hold our longs. So I guess that's that, and yeah, I guess I'll see you guys tomorrow. Protect your capital, be safe, and let your setup walk up to you. Do not be in a rush to trade just because you're sitting in front of the screen. And all the best. Let's have a good day tomorrow, and I'll see you tomorrow with the expiry video. So bye guys.